The Fed resumed cutting rates, but investors are still wondering what's ahead. The Fed delivered the expected 25 basis point cut, but the dot plot tells a more complicated story. For the rest of this year, the Fed signaled one to two more cuts, but even inside the Fed, opinions differ with some members thinking September's cut may already be enough. Looking into 2026, the forecast really didn't excite investors either. The median projection shows only three more cuts. A single vote could potentially push it to four, but that's still below the five cuts the markets were expecting. And then longer term, the Fed sees rates settling near 3%, lower than today, but higher than many hoped. So the takeaway? The Fed is clearly unsure about the economy. Recent weakening jobs data likely trigger this quote unquote risk management cut. But Powell still highlighted historical low unemployment and inflation risks. Markets ended red with the growth heavy NASDAQ down further. However, optimism remains with stocks still bouncing back from earlier lows. Looking ahead, the next Fed meeting is in October and will be shaped by just one more jobs report and another month of inflation. Markets are still pricing in two more cuts this year and two to three more in 2026. We'll see if that shifts over the next few days. But here's the question. Is this the start of a bigger cutting cycle or just a one-off cut? We'll be following up with updates. Stay tuned.